Welcome to welcome to TakeStock Live. It's just gone 2 minutes after 12. We are live if you're joining us as well. Thank you, Luis. I can see you on here. We did have a lack of sound just coming on the show there, but hopefully you can hear me right now as well. We're going to start that all over again. My name is Sam Evans. Welcome to TakeStock Live, brought to you by stockability.com. Today's date is January 7th, and it has just gone noon on here as well. If this is your first time viewing the show, feel free to look at us here on Facebook Live and type in questions as we go. We like to do market analysis, commentary. We look for our picks. We look for what we think is going up, what we think is going to go down, market chat, education, psychology, the whole thing. We like to keep it all relative to all of the wonderful things that make the markets go up and down as well. We are live, as you can tell, right? So I had a slight sort of sound issue just there coming at the start of the show, but we've got that all fixed. Joining me on the show in just about 4 or 5 minutes or so is going to be Brian Dumaresq. We had Brian on the show before. Brian actually had over a decade of experience working in Wall Street as a broker and floor manager, was actually involved in many IPOs, initial public offerings. And I'm having him on the show to kind of bring us up to speed on a growing trend in the market right now for, I would say, investors of all degrees, SPAC stocks, SPAC. No, what a SPAC stock is, we're going to be talking about it. We're also going to be looking at some of the things that we want to, we're interested in investing in right now as well. That's another big thing that we're going to be doing on here. And we also have our regular feature, Your Call, My Put. What do we think is going up? What do we think is going to be going down? And have plenty of fun on the show at the same time as well. Let's talk before we bring Brian on the show. Let's talk a little bit about what has been driving the market today. Dow Jones was set to add to Wednesday's record despite the capital turmoil. If you've not checked the news, oh my God, have you been living under a rock? The US Capitol was stormed by protesters yesterday. Unfortunately, there were issues. Somebody was shot. It was pretty rough as well. Not the kind of demonstration that we want to be seeing in any political environment. But the Dow seems to have shrugged that off of its shoulders today and has still managed to push on as well. We basically just seen, no matter what the world throws at this market right now, no matter what the world throws at this market, this thing just keeps going higher and higher and higher as well. So that's a big thing that's been going on here. The Labour Department also said today that initial jobless claims totaled 787,000 last week, which is fewer than the estimates that we had at 815,000. So that's actually a good thing. So 10-year Treasury yields are above 1%. Bitcoin today, $38,000, still going higher. All of those pundits calling for 50, 100, 150,000. I don't know the way things are going. Who knows what's going on in this crazy world? We will talk a little bit about crypto. As you know, we've been regularly talking about cryptocurrency, Bitcoin, Ethereum, all of those good things and alternative investments surrounding the crypto market. I'm sure Brian will have something to talk about on that as well. What else can we talk about today? What else has been happening as well? US trade groups are asking Pence to seriously consider invoking the 25th Amendment on here as well. Oh my gosh, do I want to get political on this as well? Yeah. No, I don't want to get into that. But the big news over here in the US is Democrats win the majority in the Senate. Basically now we have a serious swing of power here in the US as well. How's it going to affect the political landscape moving forward? I don't know. In all honesty, I don't care because I can't control it. That's why I love trading and investing. I understand, I read, I stay abreast of the news, but I don't let it make my decisions. And I don't worry about who's going to be in power. I worry about what power I've got over the things that I do as well. So, always are all the major market drivers. Let's go on over. I mean, news-wise, it's all just been politics, coronavirus, mutant strains. This is why I wanted to do something different this week, talk about something a little bit removed from that. But before we do that, let's go over to the actual charts themselves here and just take a little look and see, just so we can do a quick rundown and take a little look. I'm going to go over to my charts right now and see where we are at. So on my second monitor here, let's go take a look. So the spiders today having a big run up on here. Right now, S&P 500 trading at, what do we got? $378.08 on the ETF right now. Decent day, up 1.4%. So far today, 5.2 on the year as well, looking strong. My favorite of the ETF index ETFs here, QQQs, and Nasdaq 100 here, trading right now 314, up 2.12% on the day. Already a 6.5% gain this year alone. There seems to be nothing really stopping this market from pushing us. Have we taken out the highs though? No, we have yet to take out those highs. Remember, the high so far on the tech sector is $315.20. $3.29. 300, it seems to me like $300 is the new benchmark on the QQQs. Dow Jones Industrial Average, DIA Spiders ETF right now. What are we looking at right now? Having a little bit of a lackluster day. Earlier today, we put in $311.98, just shy of 312 on there. Right now, trading a couple of dollars off that at 310 as well. Easing its way up, not quite at the speed that we've seen on the rest of the market, but the talk of the town, my friends, IWM, the ticker symbol on the ETF of the Russell 2000. Oh my gosh, mid-cap stocks. Where did you, I mean, look at the trail of glory. Just look at this chart, guys. If you're a chart nerd like me, take a look at what you're seeing here. We topped out at 208.1, over 2,000 points on the futures. And right now, look at that for 3 consistent months. This thing is taking off like a rocket. What do I say, though? Well, what does Dan Buster Munty, my regular co-host, say? Too far, too fast. It makes me uncomfortable. But man, if you're in that, enjoy the ride. For God's sake, protect yourself if you are looking at that. Today, putting new highs at 208 and 10 cents on here. Right now, trading at 207. What could stop these markets? I don't know. Man, at the end of the day, it feels good to be an investor, but you've got to protect those things right now. We have to protect it. It seems that nothing is derailing this market. In other news as well, let's just take a look and see what else we've got. Let's go take a look and go and see what else we've got on the charts right now. Generally in the commodities market of what we're at. Let's go see what we've got on here. Crude oil, one of my other favorites on here. Now, crude oil as of late, big challenges around the $50 mark on here. Here we are again. Today, again, we are now holding, it looks like, for solid ground at $50. We've had a day yesterday. We closed just shy of it. We finally closed above it yesterday. And today, now teasing around 50 and 65. That's one of my picks right now. Crude oil, I'm looking at this chart. And what I am seeing, my friends, is opportunity right here around this $55 to $65 mark right now. This is where I feel this thing's going a little bit higher on here. That's my call on it. We will have to wait and see, but I definitely think that thing's got some more upside. It consistently higher closes week after week after week. It's hard to believe that, man, that thing was $6.05 a barrel. It's cheaper than a burger in a half decent burger joint and fries. That was about this time last year. And look at what's happened ever since. My gosh, what a move we saw on crude oil and that. And finally, let's go take a look at gold on here. Let's go and see what we can find on the gold market as well. Gold futures, forward side GC on here. Gold firmly established itself around the $1,800 mark. This has been a big number for me. Anyone of you who've looked at the show will know $1,800 has been my benchmark on gold. While that thing's been holding, that's basically the area for me. And again, I'm just seeing continued strength. I think we've just presented ourselves with yet another nice buying opportunity on gold here, right around the 1900s, but plenty of opportunity. I'd still love to see a pullback on this market. I really, really would. But if not, again, I think as a long-term investment on here, while this thing's staying consistently above this $1,800 threshold, I think gold's in a pretty good shape on here. Again, no, I will say this right now. And again, I'm not one of those double up to catch up kind of guys, but I will tell you this, my friends. I will tell you this. This thing gets down to 1,500. I am all over it. I do like that. That's the main markets on here right now. I guess I should also look in a post-Brexit world. What else has been happening? How's the British pound been doing? Let's just take a look at the British pound versus the US dollar. For any of our viewers who I know like to look at the show and looking at it from there as well, seems to me that 135 is the new number. Massive challenges coming in on the pound right now around the 135. I wouldn't say this is a great time to be buying right now, but if we can get a little bit lower, maybe about 50 to 100 pips lower, I'd like to see a little bit more upside in this. 140 and 144 beyond are my targets on that to the upside right now. I had to shift my thinking on this. Much of last year, I was bearish on the pound, but I think once the Brexit deal was done, there's been opportunities on it. Slow and steady wins the race. Again, the fact we got a nice higher close last month is a good sign for this. We do need a pullback, but this 135, 134 area is definitely the area that I'm looking at right now as well. Big shout out to Luis Tapia. Good to see you on here as well. Luis Fox, hey, give my love to Max. Great to have you on the show. Justin Roche, good to have you on here. If you're looking at the show right now, feel free to type in your comments and questions on here as well. Markets on another push. Dan Buster Mundy even joining us right now. He's on the show last week as a co-host. This week he's a viewer. He can't get enough of TakeStock Live, buddy. We wouldn't be able to do TakeStock Live without you, my friend, as well. Man, that was a quick, busy 10 minutes with a market recap that we just had on there as well. All right. So again, I want to ask this as well. Feel free to type in your questions as we go, but we like to make this, a topical show. We like to, bring in things on here as well. Dan is the man. I would agree with you 100% on there, Luis, as well. And if you are wondering what the heck's he talking about, we're broadcasting live on Facebook right now. You will be able to look at this show as a recording on the Stockability Facebook page. You will also be able to look at this show on the Stockability YouTube channel. And before the show wraps up today, we've got some really exciting news about how we are taking TakeStock further out into the trading and investing community in this year, 2021. And once again, I think I said it to you last week, Happy New Year. Woo! I need a breather, man. What has this day gone? All right, so look, it's just almost 12:15 here right now on the East Coast as well. I like to bring regular guests on the show. One of my commitments to you moving forward this year is more guests on the show. I also am committed to taking a break now and then and not hosting the show every single Thursday, and I've got that covered too. But we've had a wide range of guests on the show as well, and we're going to continue that. We got a lot of great feedback when I brought one of my good buddies, Brian Dumaresq, on the show. This was around December of last year, and I asked Brian if he'd kindly be willing to come back on the show as well. Brian brings with him over a decade of experience working on Wall Street. He was a broker and trade floor manager in Wall Street, and also on here as well, is now works with individuals on their own trading and investing needs as well. I'm going to bring him on here. I want to do some sound test on this. Brian Dumaresq, how are you, my friend?
I'm good, Samuel. How you doing, my friend?
I'm good. I feel like I needed to take a little breather there, man. We're going a million miles an hour.
I don't think you took a breath for 13 minutes.
That's why I brought it on. Mohammed Noor's just saying, bring on Brian. I tell you, the fans are all in the house. They're all live on here as well.
All right, let's do it. I'd
love to say, what a great place to be living. San Francisco right now.
Yeah, it's gorgeous, isn't it?
I tell you, Dude, it must be empty now. It's like, what is going on in the world? I mean, now, we talked about this last time on the show as well. You're a New Yorker yourself as well, about to be moving out to the Carolinas. You're seeing it in these big cities. People are just leaving in their droves. I think it might be a good time to go visit California right now, right?
You know what's funny is my neighbor, she's actually moving as well, and she's moving to California. I go, oh, you might be the only person moving to California. Everyone else is leaving.
I would have hoped that she got herself a real good real estate deal, right?
Well, you know what it is? She's got a lot of family out there.
Yeah.
So she wants to be close to family now and stuff like that. So I get it. If it wasn't family purpose, then I'm like, why would you go? So,
Absolutely.
But anyway, yeah, I'm about a week away from moving down to North Carolina, me and my wife. So it's a lot going on right now, but all good. At the end of the day, it's all good.
Absolutely. I love California. I do. I must say right now, it's just, man, that cost of living's crazy. But, I think everything needs to just reset itself. We're seeing it all over the world. It's a beautiful country. It's a beautiful world we live in as well. It's all about balance and so on as well. So what do you make? Again, we don't want to get too political on the show here either, Brian, but what do you make about what's going on in Washington over the last 24 hours?
It's nuts. It's sad to see. It really is. The U.S. to me is like, I don't know what's going on. I don't know what's going on in the market. I don't know what's going on in the politics. It just seems like they're having us look over here and they're doing something over there. It's like sleight of hand type of thing, and that's how I feel. I do, and I'm a little nervous about what's going to happen going forward. I am, but market's acting very well to what's going on. So we'll see what happens.
I guess my question to you is, as an active investor trader yourself, does it really impact you very much, Brian, when you see all the things that are going on in the world like this, or do you tend to just kind of stay the course?
You know what? I avoid the fluff, the white noise.
Right.
And watching the news to me is the fluff and the white noise. I concentrate on the charts. I see, like I said, I think last time I was on the show talking to you, I was talking about the solar stocks. And there's a couple of them that I own in a long-term account, which have been absolutely on fire. Okay. Enphase and SunPower. But you know what though? I just stick to, what the chart is telling me. There's a lot of information in the charts, and I don't even turn the news on anymore. My wife watches it all the time. And then she's like, you're not gonna believe what happened. You're not gonna believe what this you know what? I don't want to hear about it, because it actually, after a while, it starts to put me in a bad mood,
Yeah. I was talking to a friend back in the UK today, very, very good friend. And he's like, they got severe lockdowns going on in the UK. And it's almost like, home confinement. Your home has become your prison, you know. And I think sometimes looking at a lot of this news just doesn't do us a whole lot of good as well. I'd say this to anybody, and I've said this over the years, whether it was a lockdown or not, if you're active in the market, get out anyway, walk around the block, get some fresh air, do all that kind of stuff, and be very, very careful of news in any respect. All the guests I have on the show here, none of them are particularly, Brian, you know, big on the news and so on. And
No.
I guess that's, you know, one of the things I wanted to talk about on the show today. One of the things that I've been seeing or hearing a lot on the street, and you and I are having this conversation. I said, you know, Brian, we got to get you on the show. SPAC stocks, SPAC. And I was like, look, instead of me talking all about them as well, you know, you got even more experience than I have about it. It seems to be a growing trend among investors today. And some of these investors who are adopting SPAC stocks, you know, into their portfolios, they're not new to this. You know, this is not something, you know, new to them. They're just now getting into it. I thought it'd be really good to talk about that. You know, I had some people message and question about this as well and wanted to ask a little bit about it. So I said, let's talk about it this week. What is a SPAC stock? And, you know, I think my first question is, you know, you've got a ton of experience being on Wall Street yourself, and you're a broker and a floor manager. You're actually involved in some IPOs. SPACs, how similar are they to IPOs? Like, give us a little bit of a lesson on all of this, please.
Okay. Yeah. All right. Let me, you know what? Let's start at the very bottom, the foundation, and we'll work our way up. Okay. So a little bit about my background. You know, I've worked on large investment bank trading desks, Donaldson, Lufkin, and Genret being one. Then I went to Bear Stearns, and I was a floor broker on the New York Stock Exchange. And basically, so if you watch TV at night and they start talking about, hey, the Dow Jones is up, whatever, and in the background you see people on the floor, you know, walking around, that was me. I was one of those guys. And I was basically at the point of sale. So when a large institution said they want to buy or sell something, and I'm talking about, you know, it's not Bear Stearns buying it. It's Bear Stearns buying it for a big institution, a hedge fund, a pension fund, stuff like that. Okay.
Right.
So I was executing their orders for them at the point of sale. So I would be out there talking to the specialist. The specialist is the person who actually runs the stock. So anybody who wants to buy or sell, you know, let's call it General Motors. Okay, buy or sell General Motors, they would have to go to the specialist through a person like me, a broker, or they would go through the automated system. So, you know, if you buy 1,000 shares of General Motors, you're just going to go through your platform, hit buy, and it goes right to the specialist book and back to you, or a Blackpool or ECN or whatever it may be. But those are over and done with. It's more automated now, more algorithms and stuff like that. There are still brokers down there, but it's more of like it's more like a museum down there. It's actually kind of sad. So when I was working at Bear, we actually had a lot of IPOs and secondaries. And an IPO basically is initial public offering. And basically that is a company looking for money. So an IPO is, say, Sam, you have a fish and chip shop. Okay. It's the best in, you know, it's the best in Philadelphia or whatever. And everyone's like, man, you should branch out and you want to get bigger and bigger and bigger. You know, you would go to an investment bank and tell them your product. And then also they would do the research and, you know, compare you to other companies. And at the end of the day, they would figure out, do any of my customers have an interest in buying Sam's fish and chips?
Right.
Okay. And then they would, you know, all of a sudden receive interest and they would come up with an IPO price. Now, since Bear Stearns, you know, it's mostly institutions. It's not really a lot of retail people. They're going to get a piece of the IPO price or a part of what's allocated. There might only be 20 million shares, 50 million shares, 100 million shares that's going to be allocated. But there's a lot more interest in that. You know, one customer may want to buy 50 million shares. Well, you know what? You can only get 5 or 10 or whatever it may be. So that's when the day of the IPO, that's why you'll see something priced at $20. Then all of a sudden, well, it opened up at 35. Well, why was that? Because there were not enough shares allocated and the people that needed to buy it had to go to the open market now. And now you got the retail people in there as well. It's all about what? Supply and demand. Okay.
Right.
Driving
those terms a lot in my past. My gosh. Yes.
Yeah. Yeah. Well, I mean, you know, from an economic point of view, those are ones we got to use.
Absolutely.
But, you know, so moving the price up, that means that there's a lot of buy interest, tons of buy interest here. There was not enough allocated to whoever the investors wanted to buy. So that's how an IPO works. Okay. Now I actually was the lead broker a handful of times in that, and that was insane. Like that was a stressful morning. for lack of a better word, just because I might have 50 orders in my hands, some sell orders, some buy orders, talking directly with the specialist, talking on the phone to my trading desk who's running it. They got to make sure that it's priced correctly, to make sure all the order flow is down on the floor, because a lot of these institutions wait to the last minute. They want to see where it's trading. Then it's like, well, here's another 500,000 to buy. What does that do to price? Well, if we were at complete equilibrium right here between the buyers and sellers together, you gave me 500 more to buy. We got to find more of an area where the sellers care. Okay,
Right,
so it was a game, really, because you can't have 50 million shares to buy and only 10 million to sell. You got to find out, where am I going to get the other 40 million, and that's by gapping up the price to levels where the sellers are going to care. There's always going to be a price where somebody cares. So that's kind of like how an IPO works. Okay, so in a nutshell. All right.
So now we've got the SPAC. Okay.
Yes.
And what does SPAC stand for then?
It basically stands for Special Purpose Acquisition Company, and it's a reverse of an IPO. It's basically money looking to acquire a company. Okay.
Money looking to acquire a company. Okay.
Yes.
The other way around. Okay.
It's a flip. Okay. It's a flip on it. All right. So I noticed, so now getting back to it, why would you do a SPAC? And SPAC have been around for years. Okay, last year they did billions of dollars of SPACs. I think
it's like one of those things. It's like some people are ahead of the game, right? This is nothing new. It's just all of a sudden we got wind of it. And by the way, I got it. Trader Merlin, great to see you here, brother, as well. He says, I gotta love blank check companies.
Yes.
You're saying that, right?
Yes.
Good description of it, right?
Yeah, that's exactly what it is. Thank you, Merlin, for stealing my thunder. I appreciate that.
He's got a habit of doing that.
Yeah, I know.
Good friend of mine is Trader Merlin. I'll be on his show actually next week as well. I got to get him on this one. He'll be the guest on there, but he loves to steal a bit of thunder, but he's so good at it. I let him steal it. It's all
Yeah. No, that's perfectly fine. So the SPAC also allows the retail investor to get involved.
Right.
Okay. So, it's a private equity firm that might say, hey, you know what? We want to, we're going to eventually raise some capital because we want to buy a company, but they're not telling their investors who they're looking to acquire.
Right.
Okay. So now the retail people get involved and they think it's a sure win, grand slam, golden ticket. They're going to retire off this, whatever. But a lot of them do not understand the risks. They don't understand how it works. Okay. So I'll give you an example of a couple of these like SPAC stocks, like DraftKings was a SPAC stock. Okay.
All right. DraftKings.
Yeah. Virgin Galactic, excuse me. All right. So there was a venture capitalist company that went out there. They raised $800 million by doing it. They wound up buying 49% of Virgin Galactic companies. Now it gives them a easier time to access the market by doing this. And it's probably a quicker turnaround as well, because a lot of these guys who are running this money, look, they're all egomaniacs. They're all control freaks. They want to be in control of everything. Bill Ackerman, he runs Pershing Square, a very, very smart guy, runs a hedge fund. He actually created his own SPAC. He raised over $4 billion by doing it.
Wow.
Okay. So I don't know what companies acquired or anything like that, but it's really just it's phenomenal. And it's a growing trend now for the retail trader. Okay. So like I said,
let me just get this right though. Okay. So what we're saying is this, it's literally a blank check company, because I got to take that one now from you, Merlin. Okay. I love you, bro. But what's happening is they are raising money to buy a company, right?
Yes.
That's what you said.
And they have a 2-year window to do it.
With a 2-year window to do it. So, but it's almost like saying, hey, I'm going to borrow a ton of money, right? And then I'm going to go and use that money to buy another company, right?
Yes.
That seems a little bit to me. And again, tell me, I'm a simple man. I've always said this, but that seems to me that the risk seems more on the person lending the money, i.e. the person buying the stock. Here's almost like, hey, I want free money here to go and buy myself a company. Why don't you give it to me and you take on all the risk, and heck, I'll take on all the reward. Tell me if I'm wrong though. Or am I breaking it down into too much of a black and white?
Well, yeah, but I'm sure there's also like these out clauses in there at some point too,
right.
saying,
I'd hope so.
Yeah. But I don't know what they are. I can't get into specifics because I don't know that much about the SPACs. Okay. Yeah. So, but one thing about SPAC stocks though is they've really been very active over the last couple of years.
Right.
And I'm sure you're the same way. You go out in public, you start talking to people, and all of a sudden these novice retail traders are talking about, hey, I just made, 10 grand trading this SPAC stock or that stock. I'm like, I've been hearing it more and more. So I'm like, I got to really understand what's going on here.
Sure.
So I started doing some research and, you know, just started looking at things. And people don't understand that when you buy a SPAC stock, they don't understand the risks. They think they're like guaranteed something like, oh, they're smarter than me. They're going to acquire this company. Therefore, it's going to keep going up, 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 up.
Right,
But they don't
right.
understand, when the news is, sell the news type of deal, once it's announced or once a deal is closed, I've been seeing a lot of sell off after the fact. But these retail people are chasing price. They have no plan whatsoever.
Isn't that just like a general kind of like, that's what we've been seeing for almost a year now, right? As well.
Yeah.
And would
Yeah.
it be fair to say though, but I mean, the difference is people have been chasing price in the stock market since after the COVID thing, but luckily they started chasing at the right price.
Yeah, of course. I mean, look at the market. I mean, everything is going up. So everyone thinks they're the next Warren Buffett because they're buying stuff and it's going up. But they don't understand, what could happen if one day, like, what if one of these SPAC deals falls apart or something and it tanks $20 overnight? Well, I have a stop loss in. Well, that's great. Just because your stop loss is at $40, but it'll open the next day at 20. Well, guess where you sold it?
Well, that's it. Stop loss ain't guaranteed. You've got the liquidity. And that's one of the things, that's what I'd like to ask is about what are the dangers for somebody continuing it? Because like there's two things here. When I hear someone go, oh, I took 10 grand and I turned it into 50 in a really short space of time, that comes to one of two things, either incredible skill or blind luck. And people hate me to say that, but I don't care. I don't care. I don't do this show to win fans. I do this thing to bring the truth to people. And if you make a lot of money very, very quickly in the stock market or the futures market, it means either you're really that freaking good or you're really that freaking lucky. Right. And usually it comes down to luck. And if you don't know how you made money, then you don't know how to protect that money, and to me, I feel like that's the danger. It's like, well, there's always potential upside, but no one ever wants to talk about the downside associated with it.
You're absolutely right.
The downside, like in this,
it's like a gambler. You only hear about their winners.
You only ever hear, right?
You never hear about. Well, you never heard. Hey, I made $2,000 yesterday betting on I don't know, the Eagles or something like that.
Well, not anymore. No, maybe.
I know. Probably a bad team to pick.
3 years ago.
Probably a bad team to pick.
I moved here at the right time to see it, so go in.
Yeah. No, but that's what they're doing. But you don't hear about they lost $5,000 a week before on betting a parlay or something like that.
Right.
You're only going to hear about your winners.
Right.
But there's downside in anything here. Like people don't understand that, and especially people who are now like new to trading.
Yes.
Like with these smaller accounts, and all of a sudden they're buying everything and it's just going up, 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 up. They don't know what a big down day is, or they don't know what it's like to be in a bear market. They don't know. They don't understand how to manage their risk.
Well, look, let's just take this back a notch as well. And for a second then. Okay. You talked about stop loss. A stop loss for anyone who's never seen the show before or is new to this is an order that you can put in to say, hey, if the price falls below a certain level, I can get out. Like, let me give you an example here, just guys. All right. So if I just go over and I'm going to just go and share the charts, and you can see the charts here, Brian, I hope. All right.
Yes, you're good.
Let's just say, look, I got a weekly chart here. I actually brought up DraftKings, DKNG. Okay. So let's just go and bring this chart. I'll zoom in a little bit so you guys can see it right now on the show. Now, let's just say right now I was interested in buying DraftKings right here around 49.77, right? Well, here's the thing. If that thing falls off the edge of a cliff and goes down to say like $29, I've lost, minus $20 per share on that hold. Now, my thing is I could hold it and hope it comes back, but I'm taking a hit on my money. I could be losing half my money in a very short space of time, right? So the idea here with a stop loss is say, well, look, I'm going to buy it right here around 49.81. But if it breaks lower than say $44 on here, I'm going to automatically get out and I'll actually just take like a $5 loss on it. It limits the loss. It's an automatic order. That's a powerful tool. I've been in this education business for a very, very long time. There's no way I'd ever put a position on, Brian, without putting, a stop in place. But the thing is that automatic order is only going to get triggered if somebody's willing to take the other side of it, right?
Yes.
And so I need to, right? That's the thing to understand is like, assuming that somebody wants, I can have an order to get me out right here around even $40, right? But that's assuming then somebody wants to buy it from me at $40. Now that means that needs something called liquidity. Okay. That means there needs to be an ease at which goods can be bought or sold. Well, if there's not enough buyers for me at 40, I could get out way lower, 30, 35 or so on as well. That is a major, major issue that anybody could have. Would you agree with me on that, Brian?
Yes, definitely. Now, one thing you got to keep in mind too, a lot of people don't understand this. So say if you own DraftKings, I'm sorry, what'd you say, $49 is the number? Oh, let's keep that number. Now, $49, and all of a sudden the government tomorrow says, hey, you know what? we're gonna go back to making it, illegal or whatever it may be.
Right.
What do you think is gonna happen to DraftKings stock?
We are going to whip all the way down.
Okay.
Right?
So you have a stop loss in at $45. Okay. But the next day it opens at 20.
Well,
A lot
let's
of
just
people.
say, I mean, look, let's look at some charts. I mean, it could happen, right?
Well,
It's been there before.
I'm just saying hypothetically, I just want to, because the uneducated person doesn't understand this. That, I have a stop loss in at 45. I have a stop loss in at $45.
Doesn't matter.
Well, that's great. You're not selling it at 45. If tomorrow the next tick or where it opens up is at $20, you're going to sell that at $20.
Now, let me make this clear. I love stocks. I just prefer trading derivatives of stocks, right? Because of that. Yeah. And Merlin, and again, I'm just saying, and here, you went gaps on a SPAC. You want gap. Look at Nicola, NKLA. Let's do that right now, man. I love the interactivity on here that we got.
Yeah.
Look at this.
Oh yeah, there you go. Yeah,
Gapville, right? Yeah. Exactly what you were just talking about. I know you another one, Merlin. I'll make up to you when I'm on the show with you next week. Let's just say right now, look, we saw a massive sell-off in this market right down on
exactly.
Here. Let's see how you would have felt, right? So let's just see right now, you were around, let me just undo that on here. Let's say you bought somewhere here around 28, right? And then you've loaded the boat on that. The very next day, look where it opened, 22, and then ended up going down to 20. Well, you're saying, but I was fine. And the reason I was fine is because maybe I had a stop loss right here. And let's say my stop loss was at $26, right? Well, guess what? The thing opened at 22 the next day. That means what you lost an extra $4 that you weren't accounting for, right, Brian? That's what I'm saying. It will get over that stop loss and you'll lose more. Absolutely vicious. Thank you for sharing, Merlin. I mean, people don't realize this.
Yeah, but also, you know what? At least you had a stop loss in. Okay, you took it on the chin, but now it continued to go lower after. Now what about the people that still own it up there at the $28 mark? Now what are they doing? Well, they're praying.
I talk about bad. I feel even worse for these guys.
That's
why. Look at that, $93.99, $93.99. Someone owns it up there. I mean, come on. People don't. This is a concept we talk about a lot as well when we're working with students. We talk about this concept, guys, of too far, too fast. Do you see that?
Yep.
You get these straight parabolic moves. You see a lot of that in the SPACs. You got another couple you wanted me to take a look at, hey?
Yeah, I do actually. So I'm going to save this one for the end here. But I was talking about DraftKings. Another one is QuantumScape, QS. Okay. That one a while ago was a SPAC, shot up, and now look at it.
Ooh. 132 and change on that, nearly 133. And then, I mean, look, I heard the term, Brian, and you would have heard this many times over the years, pump and dump, right? I mean, that is your classic pump.
Look at that.
Dump right off the edge of a cliff, right? You hear it all the time, big moves up, powerful moves
It's
down.
almost vertical. When things go vertical, what are they going to do?
So you throw a ball in the air, it don't fly, it comes straight back down, right?
You're absolutely
right. Merlin, some fool bought at $90. I tell you what, it's I always ask myself the question, and you never know. And it's all about, you've got to go out there and you've got to be speculative and you got to try things, but you got to do it smart. I mean, and the
100%.
The other thing I worry about is the volume on these things as well. Let me go ahead and actually do that as well, Brian. I'm going to just kind of make this full screen for just a second. Let me just see if I can just bring this up right now. And on the process, I might actually be able to also, let me just see if I can bring this up. There you go, volume. Let's bring that up and see. I mean, the volume's there. The volume's been there, but look at the volume spike here and dropping off. Luckily, the volume's there. The problem is, though, the volume can be a massive spread, can't there? Between as well. So that's the problem as well. It's like you could look at the tape, and what you want to see on the tape, you've got the bids and you've got the offers, and you want to see lots of buys on the tape on the op bid side and lots of sells on that where people can literally match at those prices. Problem is that you got a ton of willing buyers down at this particular point, but your next offers are way up here. Guess what happens when somebody buys at market? Bang, that thing shoots up, but also comes back down. Wide open spaces in it, and maybe it's a subject we should talk about in more detail another time. But again, all the stuff that I think so many people, Brian, are so unaware of. Wouldn't you agree?
Yeah, 100%. A lot of people who are trading these, They just think, oh, it'll come back. It'll come back. It'll come back. I'll hold it. It's a long-term investment now. It was a day trade, but now it's a long-term investment.
I was saying that about one of my girlfriends 25 years ago. She never did. It's like they don't always come back. The stock doesn't come back.
Look at I'm going to date myself here, like Enron or even GE. GE.
Sorry, Brian, I don't know what that is. Can you explain that one to me?
Yeah.
Who?
Over $100 oil company is not even around anymore. I mean, forget about it. It's ridiculous. I mean, there's there are these SPAC stocks all over the place. And one thing I want to talk about too is I was in a chat room yesterday, and yesterday IPOC was a SPAC stock, and they were going to go through with the finalization of the deal. Okay, they were acquiring Clover Health. So as I'm in the chat room, I was just sitting there and just watching all these traders just talk about, what was going on. And I took a couple screenshots and I wanted to show you on here, but as I was going through it, there was a lot of words in there that I don't think are appropriate for the family show we have here. So I'm going to read it to you. I got 5 of them here. I'm going to read them off my phone. And
then what stock was this on? So I can actually take a look at it afterwards.
IPOC.
IPOC.
Yes, sir.
I love this. Oh, okay. All right. Okay.
All right.
Fire away, sir.
So there's one here where, so if I'm not mistaken, after the ticket changes, which should happen earliest on the 8th, my shares through my broker will automatically change to CLOV along with the share price. Is that correct? Do I need to do anything? So here's a person
somebody on
buying it that has no idea what's going to happen after.
So who's already bought something but doesn't really know what they've bought and what the implications are of them buying?
100%.
Is that what we're saying here?
Yes, they have no clue what is going on. So basically, they're taking their money, buying something, and they don't know what's going to happen the next day or going forward. Is my broker going to take care of it? Don't you think you want to know these things before you invest in anything? Okay, that's just one thing. Okay,
I know. Go on, carry on.
So those who bought in the $16 and $17 range, don't worry. This is going to be one of the best 2020 best stocks, 2021 best stocks ever. Hold on to it. What? Look, I have. You probably can't see here. I'm sorry.
All right, cool. No, that's all good. That's all good.
But I have. I'm reading it off these screenshots that I took. I'm not going to mention names or anything like that. What do we do now? Somebody's asking. And this is all in a chat room. There was thousands of posts. I couldn't keep up with it. It was going so fast. Sell fast. Hurry up before it goes below 14. Like.
Oh, well, hey, mind you, saying that again, sell fast before it goes below 14. That's a wonderful one. Let me share a chart. I've actually got it. IPOC up here. Sell fast. This is yesterday.
Yeah.
Sell fast before it goes below 14. Well, they saw you coming, son. Because I'm not being funny. Look where this market bottomed out, 14.15. Well, guess what?
Yeah.
Popped its way straight back up to 16 and 31 the next day.
Yeah.
They probably just wanted to get it cheap. Hey, you sell after the drop and I'll buy it back from you. I mean, come on.
My personal favorite, and this is the last one. We can go on ever about this.
Please do.
Take out your stop losses. This is going to rip.
Wow. There you go.
I gotta be honest with you. That's gambling. It's emotional trading. No plan. Hey, look, you'll make some money doing this, but do you think this is something that you could sustain over a very long time?
Well, now that's the question I had for you, Brian, because I think that for me is what you just summed it up for me there. How long is sustainable, right? You can go down the track. Well, they're all shut right now, but you could go down the track, over a year ago right now and go down there and, look at the horse, have a nice day out with your girlfriend, partner, boyfriend, whatever, family, friends. Hey, I like the name of that horse. One Leg Jack. Oh, that's great. It reminds me of my grandpa. Okay. I'm going to go and put, $500 on it. And guess what? Comes in and they make themselves, $2,000-$3,000. Whoopie-doo. Rubbing their hands together. I've got a new career. Really? Listen to yourself.
Oh, yeah. Yeah. Great point.
Roll the dice. That's what it is. Rolling the dice to me. That's how it feels, that there's just the dice is being rolled here. And what I always look for is consistency. And, we can all get lucky, we can all, have a good day. And I am all for investments like that. Look, I'll say this right now. Anybody looking at the show is thinking, man, this guy's an asshole. He's putting down this. I've made all this money doing SPAC stuff. I've made my money penny stocks. I say, God bless you. Good luck to you. I'm not saying that's a bad thing. What I'm saying is keep it in context. I have zero qualms about people having success. What I have concerns about is, are they doing it safely, and are they negotiating the waters, in the right way? If you want to get involved in this market, great, be my guest, have fun. And when you make a bit of money, hold on to it, but don't expect consistent results, and also expect that you are going to get a slap around the face one day, because the market has a habit of doing that, because it's impossible to protect yourself the best way when you're trading markets like this. This is why I've always been, a preacher of trade the most liquid markets, go to the big ETFs, stock indexes, FANG stocks, gold futures, oil futures, the stuff I talk about, currency, where the liquidity, the volume, the slippage is non-existent practically. That's where the safety is, right? And that to me is where you start to get consistent. What are your thoughts on that, Brian?
Well, one more thing here. People, I think, enjoy the rush of being in a stock trade, because it's like gambling for a sporting event. They enjoy that. Like, they enjoy the rush. And that's a problem, because now they're super emotional. They're letting their emotions dictate, what they are doing. How many times, I'm in a bad position. All of a sudden, like when you feel like you want to get rid of it, or yeah, exactly. Or once you start singing Kumbaya and everything's great in the world, time to sell.
Yeah.
It really is. I have a friend of mine who
feel unstoppable on that trade is probably going to take it all away.
Yeah, or manage your trade. Like, that's the biggest thing. Like, people don't realize, if you want to have a sustainable career doing this, you need to, have a systematic plan or a process to follow to help you and be consistent. Like you said that before, being consistent. And it's very true. Like, the only thing that you could really control in trading is your entry. Everything else, everything else, you're subject to the market.
Well, I think Merlin just typed in here, Ackerman SPAC fund, PSTH is up 20% since IPO last year. They have done nothing. It's insane. It's reeks of FOMO, fear of missing out. Couldn't agree more.
Yeah.
Right? That's why people are going to this now, because it's the next shiny thing, isn't it?
Yeah.
And I think that's exactly what happens to, people, it's just, it's very missing out, and that doesn't breed good, consistent results to me. I mean, it's just do it safely, right? That's what we're
chase. Everyone chases, I mean, the electrical vehicle sector, obviously with Tesla and everything, has been very strong. And I was starting to say before, I got a buddy of mine that trades NEO and XBEV and the other ones, whatever, and he's chasing them.
Yeah.
But he doesn't understand stop losses. He doesn't even understand what shorting is. Like, how many people you talk to don't even know what shorting is.
Let me stop you there. How can anyone be active in the market and not even understand what shorting is? That scares the bejesus out of me.
You know what some people say? Like, oh, wait, so I buy it up here, then I sell it down here? I'm like, well, just turn your screen upside down then.
Right. I mean, look, and I'm assuming a lot of these SPACs as well that I'm looking at on my screen here, Brian, as well, after that 30-day period, because you can't short stock on the first 30 days of its IPO, you can short these things?
I'm not 100% sure about that.
Yeah, I mean,
I'm sure you can.
I always call it like it is. I've never been a huge investor. Like me, I'm a boring so I trade the same thing every single day, week in, week out as well,
Yeah. Oh, I'm the same way. I trade the same 2 or 3 things every day, and that's about it. I just kind of got intimate with them, and I just follow them, and that's it. When you spread yourself thin, that's when you start missing things and making bad decisions.
I think this is why, you work with a lot of students, every single day, and, why we focus on a specific set of futures markets, stock index futures. We focus on, all of that. We focus on a set group of what else do we focus? Set group of forex pairs, right? I mean, we have about 6 different markets that we look at. I'm just replying to comments as we go on my other screen. I've got multiple screens around me in my studio. Like a set group. I mean, Dan Bustamante, who you know is on the show regularly as well. He has watches about 5 active markets he trades inside and out. And again, there's a guy like yourself who's from a different generation of institutional trading. But when he's been doing it in the last 10 years himself as well, was working on a desk where he had set products he looked at. To me, this just smells of I'm looking for the next big thing. I'm looking to roll the dice. I'm going to the table and seeing it is, you know, and again, I'll say it to you, good luck to you, but just be aware that there are safer, better ways to do things, right? What would you recommend, Brian, to anybody who's getting into this right now and saying, well, I like it, you know, because I know what I'd say. If someone you done well on it, protect it, you know, protect what you got, but then start maybe using that to look at doing it a safer way. Right?
You know what? When I left working at Bear Stearns, well, when they went out of business, and I saw that the business in general was changing drastically, that's when I knew how to make a change, and that was over 10 years ago. And I'd be honest with you, when I was down on the floor and I saw the order flow and stuff like that, I'm like, oh, this is easy. I can go home and do this. But I didn't know a candlestick from a chopstick. You know, I didn't know what was going on. I really didn't, because I had no education. And then when I came home, I sat in my basement. I had 3 monitors in front of me. I'm like, yeah, this is great. And the first day I remember like going to hit my keyboard. I'm like, I have no idea what to trade. I don't know what to look at. I don't even know where to start. Yeah. Okay. So what I did was I started to, self-teach, and then I was making a lot of mistakes in the beginning, chasing stuff, giving too much room on my stops or whatever it was, and setting up alerts on 100 different things. The only problem is the next day I'd have 25 alerts go off at once. I'm like, which one do I trade? What am I doing? Yeah. So then I got educated, and through time and a lot of hard work and putting time in, I realized that less is more. And by that, I mean, now in the beginning, I would look 100, 150 stocks. Now I look at 3 basically futures markets. Now I feel that my trading is a hell of a lot better. Number one. Number two, I've become intimate. I understand where key levels are that I could pay attention to, and it just helps my trading that much more. And you know what? Like I said, less is more has been invaluable for me. Okay.
Brian, great conversation this, I gotta say. I mean, really, really useful, the whole thing that we've been talking about today. Absolutely love it. We actually, I know at Stockability, you were very active with the student community there as well. What I wanted to do was I wanted to show you this and go on to here as well. I'm going to just screen share right now on here and show you guys something that I think's pretty cool as well. If you're interested in finding out some alternative ways of looking, at the market. And again, I think, we'd all agree that we're going into 2021 completely uncertain once again. Right, what does the future hold on here? We've actually got, if you go to stockability.com, you see on the website here that I'm just searching on this as well. Great little opportunity here for you guys to see a little bit more about what Stockability and the team do go through. Here you go. Here's the website. Here's the URL, stockability.com. I'll put it on at the end of the show as well. And on the homepage, scroll on down, constantly working on this, making this better and better and better. The resources, tons of things that we do on here as well. Right at the bottom of the page, you will see a couple of cool things on here. We're actually putting on a new a webinar on here that's coming up in just a couple of weeks, actually. Complimentary webinar for anybody who's looking to actually find out more about what we call the crisis-proof business. Okay, one of the things I've always described the market as, I've always decided on here. One of the things is this: if you do it the right way, if you actually do this, the right way, this can be a recession-proof, crisis-proof business. Some of the things that Brian and I are talking about, and we're not talking about spinning the wheel in Vegas. We're not talking about just throwing our chips on the table. What we're looking at here is doing this with a systematic approach, doing it the right way, day in, day out, building consistency from the market as well. There are times of uncertainty, and in times of uncertainty, you need to be as certain as possible about what you're going to the market to achieve. What are your goals? How are you managing your risk? What is an entry? What is an exit? How do I maximize and squeeze every bit of juice out of this as well? We've got a great team of instructors, myself, Brian going to be on there as well, Ryan Watkins, Dan Bustamante, and some other special guests. We're looking probably going to be a 2-hour webinar. We're going to be holding 2 of these. The first of which we're going to be holding, we're going to be doing on here is going to be on Thursday, 21st of January at 7 p.m. Eastern. We also want to make it easy for anybody around the world. We've got listeners and viewers all around the world to be able to join. We'll be doing the same webinar also on Tuesday, the 26th of January, and that one's going to be at 12 Eastern, 9 a.m. Pacific, 5 p.m. London time, giving everybody an opportunity to get a little part of that as well. We'd love it if you could join us. Go to stockability.com, scroll down to the bottom of the page. I'll do that right now. Right at the bottom. In fact, when you go on the website, it will pop straight up and it will show you, but scroll right down on there as well, and you'll see it. Complimentary webinar, the crisis-proof business right here, and those 2 dates are available for you to register on as well. And if you have just joined us and you know what I'm talking about, I'll recap on that just before we finish up today. today on here as well. So Brian, look, plenty of food for thought on everything that we've been talking about here. I've loved this. I've absolutely loved this discussion. Everything that we've been talking about here. I mean, this has been awesome on here as well. Always love having you on the show too. It wouldn't be Take Stock if I then didn't ask you your call, your call, my put. Every week I do your call, my put. Every week. I am the host, so I always give my guest the first call. Tell me, are you taking the bullish play on your call? Are you taking the bearish play on my put? Because I always get the bearish play. What do you got in store for us today?
You know what? I'll take the bearish. Okay.
You're taking the bearish.
Yeah, I'll give you a layup. Okay. So
this will be this is new for me. I mean, this is wonderful. What are we looking at today, Brian? What do you fancy? I'm going to go over to and screen share so we can all see this.
So, okay. So, I mean, it's very hard to find anything that's really bearish. Okay. It really is. But, I noticed that the TLT, I'm just punching up on my chart as well.
TLT.
Yeah. The TLT has been really in a downtrend since the end, I don't know, last quarter, last year.
Yeah.
And, look, it's starting to level out a little bit. I think it has a little bit more downside. How much, I don't know, but I would not be shorting here. I'd rather see a rally up before I took another short somewhere. I also noticed that the Japanese yen today was showing some weakness today.
All right, so let's come to that in just a second on here. But for TLT, anybody who doesn't know much about this is the 10-year Treasury ETF, isn't it? So we could be trading this. Is this your 20? I can't remember off the top of my head. Is it the 10 or the 20 on here? This is the Treasuries, right?
Yeah, it's a 20-year.
Yes, the 20. Yeah, I'm so used to trading the TY, which is the 10-year Treasury future. So this is the 10-year Treasuries. But again, much as if I pull up a chart of the TY, which I think I can probably do on here as well and show you as well on here on this, it'll look exactly the same. But that's fine. Let's stick with the TLT because that's the one I like working on because of the options available. So TLT, I mean, I agree with you, Brian. I mean, we've been seeing some real
like I said, I'm not shorting it down here. I'd rather see a rally up before I do it.
Consistent weakness in here. I gotta say to you, man, I am seeing a lot of opportunity to get this thing down to around 135 at the moment.
Yep, that's exactly the level I was looking at. Yep.
I'm looking at monthly charts here. I mean, I'm looking at long-term charts with you here. I see nothing but wide open space on here. I agree with you. The sell was as I actually was in our live trading room, had a little punt on this area here, considering how it opened up, but it gapped right over the area today. So invalidated the trade. What I would like to actually look at here, okay, I'm going to take a look at this on the weekly chart. I think the weekly chart really kind of shows us a nice picture of that. I mean, this wick to me, 135 is different. Let's be conservative about this. In fact, I'm going to say probably as a price level, really this kind of whole, let's just put this on here, this whole area across here, maybe actually, wouldn't you say, Brian?
Yep. I agree.
I agree. Whole region. We call this a support zone on this. I am not really interested in any of this. What I really like to see, I got to say, is a pullback to around the 155 area. If I could get it, because I'm cheap. If I could get that and ride that down from about 155, I think you got about a $30 move to the downside. Well, the $20 move to the downside.
That's pretty much exactly how I'm seeing it as well. And that also ties in nicely to what we were talking about before about gapping down.
Yep.
Okay.
Yeah.
Hey, look.
It does.
Yeah, and also, keep in mind too.
There at all, would it? I mean, let's be honest. That stop would not have helped you too much if you look at that chart and zoom right in. If you had if you were playing this market and you were playing it, to trying to get some stops on this thing right now, man, you have no luck on that whatsoever. I mean,
gaps could also work in your favor as well. Okay, like Ryan, I know he got long gold probably a couple weeks ago, Ryan Watkins, and it gapped up and he got out of his position and made a killing on it.
He did.
So like I said, they could work in your favor, but most of the time they won't.
There is that as well. I mean, these things do actually this does actually happen as well. So just some of the point that you were making here. I mean, if you were in this market from this particular area, okay, and you had a stop loss, just say around 155, this thing opens here around 154, that would have been an extra buck you'd have lost on that position right there.
Very good point. Yep.
So looking more for a rally on that before taking this thing lower. So I guess then what that does for me is that, man, that leaves me on the side of, okay, what am I bullish on? I mean, it's a funny one, actually, just to because last week I was looking at Zoom. I was really bad. I got some, I don't want to call it hate mail, by the way, but I actually, on the show last week with Dan, it was a real funny one. I actually had some students going, I did a negative play on, on Zoom. I just got to bring up the chart and show you, actually. So you can see, hopefully you can still see my charts just fine here. Yeah, I was like, I'm really bearish on Zoom, and I had Dan with me as well. And since that show, yeah, we had a down week off of that. Clearly my influence, call me Jim Cramer, is starting to show on here. But literally since that month opened and now, we had a very much a down week last week. I continue to remain bearish on this. I didn't want the bearish play, but heck, I've even put it out there again. I can't help myself, I guess. This is just the way it works. But I'm looking for Zoom to hit the $300 mark before I'd maybe consider it. But I think this is a market, again, that is, I love Zoom. Heck, Zoom, we love you. We're using you right now. But there's things you could be doing to enhancing, and staying, on top of things, being a little bit more innovation. I also think it was, again, too far, too fast. $600, unsustainable. Typically a pandemic play on here. The market's making consistently lower closes. So I still, just for the record, think even 250 is probably the goal on that. Around 250 would be a nice buying opportunity for consideration. But I tell you what, Brian, I like it even more at 150. What about you? I mean, man, I really like it down here at the 150.
Yeah, that's the more conservative zone, and I like that one a lot. I really do.
This screams to me of puts. This screams to me of like getting puts on this. But I'm meant to be doing the bullish play. So the bullish play.
Yeah.
Also, before we go though, before I do that, you did actually mention the Japanese yen as well. So
yeah, it's showing weakness today.
7. So let me just take a look at this. So I'm looking at the futures of it right now. You know what? I can see it, weakness in this market right now, looking at it very high up at this particular point, where we've done, again, and a complete rejection at this price level. Interesting how we literally touched this. I'm going to go and draw this on the chart right now so everybody can see it. But this kind of key price level that we had just around here, let's go and mark that on the chart that we can see around the 0.00977. That's the area in question, I think. And the fact that we just failed, to get over that. In fact, we actually got, I would say, just probably a little bit shy of that. That's really it, 975 on that. Another one of those markets, I got to say on here though, that uptrend has still been pretty steady on that. I can't see this going. I can't see this thing going down in one fell swoop. No. For me, I'd still be interested in buying it right now. On the short term here, would just say to you, like, I'm just really kind of liking this whole area that we've got around here. In this 95 mark as well, for a little bit of a pullback potentially in that area there. But yeah, I can see a little bit of weakness in this. Again, you see what happens when these markets get to these highs, and the currency market can definitely be a little bit more choppy in that respect. But what am I bullish on? I don't know. Guess what I'm bullish on? The stock market. There you go. I mean, maybe that's just the easiest thing to do. I've been looking at this, over and over. Let's go over to and take a little look on there. See some of these markets that I've been looking at. I mean, again, I've been waiting. My good old friend, the Qs, I've been waiting for a decent, pullback on this thing, the tech sector. But, I have to remain bullish on it with the state of the trend. It's steady and so on as well. I already did that, Merlin. You missed me. I already did the bullish play. So I'm disappointed, Sam. You're not bullish on the pound. Right at the start of the show, I put my bullish pound out there, looking for 140 to 144 on that, my friend. We'll talk more about that on Wednesday. But yeah, Merlin, I guess I did do it. I was right at the start of the show. I think I said, Brian, didn't I? Bullish on the pound. So yeah, I remain bullish on the pound, which means to me, actually, with that in mind, let's kind of branch out a little bit further. One of my favorite currency pairs to be looking at. Well, what is going on here? I do not know what the heck's going on that chart, or what's going on there. Let me just see if I can reset my charts, because they've gone kind of weird on me. Let me try this. Well, you can see it here on this particular chart, on the one-day chart, but I want to look at this as on a different time frame. So let me see if I can get it up for you onto there. I can't get the data beyond that, unfortunately. Right now on this, I'd say where we are on the pound, the British pound versus the New Zealand. Really like where this is. Let's just zoom in on the chart right now so you can see it. Here it is trading around the 186.95 mark. I think as long as we are holding this region around the 186 area, I got to say in the short term on here, I think 189, 190, that would be what I'd be bullish on right now. And I like that. And this is a shout out to you, Merlin, as well. Pound versus dollar, I think is a little bit overbought. Pound versus New Zealand, definitely not. That's on the cheap right now. Great opportunity to pick up the pound up against the New Zealand dollar right now for a real low risk trade. So, instead of just saying, hey, the overall stock market, that for me is my market there. The monthly and weekly charts look really good on that, Brian, too. So pound New Zealand, did you know that's one of my favorite currency pairs to trade? You ever traded the pound New Zealand, Brian?
I have not. No.
I recommend you start considering it. It is
all right, good.
Very nice market. So what's on the cards for you for the rest of this week, my friend?
Oh God. Well, it's all about packing now.
All right.
I got the movers coming a week from today, so it's time to, buckle down and pack everything up and
off you go.
On to the next chapter of my life.
Absolutely. Well, listen, we all wish you the greatest success and a safe move on that. I'll be talking to you as well. Love it. We're on your show. Join us again next month, Brian. I'd love to carry this on as well. And we can a little bit
I'd love to. Love to.
So super great. Lots of great comments for everyone as well. Go have fun. Have a safe move. Happy New Year to you, Brian. It's been a pleasure having you on the show. Thank you, sir.
Thanks, buddy. I'll talk to you soon. Take care, everyone. Have a good day.
Thank you.
All right. See you.
Ladies and gents, that was Brian Dumaresq on here of Stockability. Great guy. We love having him on the show here as a regular on there, talking about SPAC stocks. If you've just joined us and you're like, what the heck were they talking about? This show is recorded. This show is going to be rebroadcast live on the Stockability YouTube channel. You'll also be able to look at this recording on our Facebook live channel as well. We love you joining us live because we get your comments. We actually get to answer your questions in real time. And the more of you coming in here doing that, the better it is. A couple of bits of different business for me to go through with you before I wrap up the show as well. If you missed out just before on this, Stockability is holding another 2 special New Year's webinars, complimentary webinars. We are calling this the crisis proof business. Okay, how to get set for the year ahead in any market, whether it's going up, down, or sideways. We have 2 dates on offer for everybody on here: Thursday, January 21st at 7 p.m. Eastern, Tuesday, January 26th at 12 p.m. Eastern. So basically, either one of those, we put them at different times of the day so you could join us. I'll be there. Brian, Dan Bustamante, Ryan Watkins, and a few other guest speakers joining us for that particular one. We hope you can join us there. We're really looking forward to showing you what we've been up to in the Stockability community so you can see a little bit more of that as well. And things are also going to be changing a few other things too. TakeStock Live is going to remain here on Facebook Live, 12 noon every Thursday Eastern time as well. But coming in the next couple of weeks, you look out and try and go and subscribe to the Stockability YouTube channel, where we will be doing the TakeStock Live open house, okay, where we're actually going to be looking at the markets in real time, getting you guys coming in, giving you an awesome Q&A, getting your kind of comments, looking at trades with you as well, and showing you a little taster of what we get up to in Stockability as well. So again, Javier on there, interested in Forex, please, next time for you. Absolutely, Javier. Hope London's treating you good and you're staying safe out there as well. So look out for the TakeStock open house. We're going to be doing that. Stockability open house as well. We've got more things going to be on there. We will post on our pages as well. Subscribe to our channels, find out our latest updates, and don't forget to go to the stockability.com website, where you can actually subscribe to our newsletter and stay on top of everything that we're doing, and more importantly, some amazing tips, tricks, and also suggestions to help you navigate the waters of the market. Guys, this has been a great show. I am absolutely talked out. My name is Sam Evans. This has been TakeStock Live. Thanks for all your comments and questions. Have a fantastic rest of your week. And next week, I'm going to be joined by none other than Mr. Ryan Watkins, lead coach at Stockability. Guys, have a wonderful week on here. I'll see you next time. Thank you.